We have Nitin Jain, CEO, Edelweiss Global Wealth and Asset Management, joining in on the sidelines of the H&I conference at Edelweiss. Thank you so much, Nitin, for joining in. Let's talk about the key theme then for the H&I conference and what is it that we can expect?
No, it's going to be one of the most exciting themes, one of the most exciting events for Edelweiss this year. This is our Emerging Ideas Conference, where we are inviting 70 exciting companies to present their cases, their dreams, their business plans. On the other side, we will have 400 plus family offices, high net worth, and some institutional investors to identify these themes, hopefully help these companies to grow in the future. We are also inviting some of the cabinet ministers to talk about the contributions that they're making in terms of building India, and some of the global voices, some of the global expert voices in the entire digital space. So it's going to be an exciting two-day event.
Oh, yes, indeed it is. And those are just some of the themes that you will be discussing as a whole. Sounds very interesting. But let's talk then in particular about a sector that you guys are going to focus on. You said housing finance, and this is a space that is emerging as very popular as well. And there's a lot of growth potential seen in the overall Indian economy from the housing finance space. What is the outlook, Nitin, within this sector, and highlight for us any risks that you see?
No, I think housing finance in particular has been one of the areas that has seen secular growth over the last maybe 15 to 20 years. We have been growing at around 15 to 16% on an average. And if you see some of the NBFCs which have done extremely well are in the housing finance category. I don't see any derailment of this trend over the next 5 to 10 years, but I do think there will be some differentiation that markets will now create amongst the people who are more efficient, who are managing their risk better, and so on and so forth. Because we have really never seen a bad cycle till now. I think over the next 5 to 10 years, if we see some kind of derailment on the credit quality, that will most likely differentiate between the good and the bad. And I think you have to be careful in the choice of the companies that you're making from a investment point of view right now. But the opportunity stays exciting. I do think over the next 8 to 10 years, this will continue to compound anywhere between 13 to 14%. But you have to be more selective now.
Yes, indeed. And I'm sure the same applies when it comes to the overall cement space as a whole. There were these concerns with respect to the price rises and the demand supply constraints. What's the advice for investors looking to put their money into cement?
No, I think I don't like to necessarily comment on sectors and companies, but just as a general advice, there will be reasonable growth in terms of infrastructure and in construction in general, which will definitely mean that there will be more demand for materials, including cement. And we would look at it positively. But again, go for companies which have strong corporate governance, which are not leveraged too much, which have pricing power, and which are also in markets where there is demand, because the demand is not uniform across the country. So you will have to make those kind of choices, and there are enough such companies available right now.
Oh, yes, indeed. Let's get in a sense as to what the outlook is on the whole, Nitin, when it comes to the kind of liquidity flow that we've seen. No doubt, the domestic institutional investors have helped to a large extent to keep the market liquidity afloat. FIIs too are seeing a lot of interest, especially on the back of the kind of the Moody's upgrade or our ranking with India business. Do you think that the overall liquidity situation is going to remain afloat?
I think overall it's a pretty benign environment from a liquidity point of view, and I do think that this will continue to hold at least for the next 3-4 quarters, unless the global flows reverse for things that I can't see today. In case global inflation picks up, interest rates go up, maybe that might cause some reversal. Outside of that, global flows have to be positive towards India. Mind you, I'm not only talking of FII flows which are reasonably momentum led, But if you look at FDI plus FI together, those flows are strong and they will continue to remain strong for the next 6 to 9 months. I think what has changed fundamentally for us is the domestic flows. I think aided by demonetization, aided by formalization of economy, and as our per capita is growing and we are making that shift from low income economy towards the middle class economy, I think a lot of flows are moving into financial assets. And that is overall helping the cause of all kind of markets, including equity markets.
Nitin, how are you looking at the overall, some of the key infrastructure, the space as a whole, given the fact that there has been a lot that's been initiated by the government by way of reforms? So things are moving on ground, the overall interest rate environment, in light of all of this, how are you seeing the infrastructure themes shaping up?
We are reasonably bullish on the infrastructure space overall. In fact, as we speak, we are going to launch our infrastructure fund, and I think it is not one of the sectors that investors have made a lot of money over the last 8 to 10 years, and hence some amount of skepticism is absolutely justified. But if you look at the macros today and if you look at the key indicators, you'll find a lot of investment is happening, a lot of policies have changed, and there are a lot of seasoned assets that are available right now with companies, and those valuations are very, very depressed. So just to give you an idea, we have launched a fund where we are looking to acquire all or mostly seasoned assets at a 12 to 13% gross yield, which means the net return to the investor when levered can be anywhere in the range of 15 to 18% easily. And I think 10-year, 15-year returns of 15% kind of yield are very difficult to find in any kind of asset class today. So these are the kind of opportunities that are available in infrastructure. We continue to remain bullish, and yes.
All right, let you go on that note. Nitin, lovely having you with us on the show, and all the very best for the Edelweiss HNI conference. It's an interesting theme that you guys will be discussing, and we will be touching base as and when things unfold there as well. Thanks for joining.
Thank you so much.